Good afternoon, students. How are you all doing? I have some voice in the background. If everyone can mute. Yeah, great. Yes, very good afternoon, Preeti, Kasak, Nitin, Niru, Anuradha, Tambeshwari, Dilip, Ragini, Ajay, Surya, Hardik. Yes, very good afternoon, all. Yes, Nitish, good afternoon. Yes, good afternoon, all. Manvi, Sai Kiran, great. Student, today, maybe it may happen that in between I'll be standing up because I have some back issue today. So I may not be able to sit continuously for a long time, but I will stand in between. So don't be shocked if I suddenly stand up, because if by chance I get a catch, I'll have to stand up immediately. But otherwise, we are good to go. So let me just summarize what we did in the last lecture before I can take you ahead. And also, I want that you all also pitch in with your inputs and raise your doubts or questions, if any. So last lecture, we started discussing the difference between exemptions, deductions, then difference between deduction under 10AA versus chapter 6A. Both are deductions only. And then thereafter, we went on to discuss the conditions which are put in for getting the deductions under section 80A, where first subsection 1 says that while computing deduction, while computing your taxable income, you will be allowed deductions, but this will be allowed only if you're opting out. Presently, there are only 3 sections where deduction is allowed under the new scheme, that is the default scheme. Remaining all deductions are allowed only if you are opting out, that is you are in the old scheme. Second point, subsection 2 says that deductions automatically will be limited up to the amount of total income. And in case your deductions are more, the excess deductions would lapse. That is to say, you will not be eligible to get that excess deduction carried forward so that you can claim it in the other next year. That will not be allowed. Only losses can be carried forward, deductions cannot be carried forward. Subsection 3, deduction will be allowed once. If it is allowed to AOPBY, it cannot be allowed again to its members. Then, if you are availing under one section for the similar act, you cannot avail the benefit under other section. So if you are availing under 10AA, that is for SEZ, you cannot come back and avail under chapter 6A, heading C. Heading C is for specified incomes. It is not part of our syllabus, but I had mentioned or I had informed you all what is covered in heading C. It basically covers the deductions with respect to different specified sources or specific area-based deductions, correct? Fine. Next, deductions under this category, that is heading C, shall not exceed the profits and gains which are derived from that particular business for which you have those deductions. Then these deductions will not be allowed if you have not claimed the deductions in your return. So if you fail or if you forget to claim it, you will not get the benefit. Then most important, if you have 2 businesses, one eligible, one other business, and you are adjusting your internal transaction in such a manner that the business which is eligible is showing higher profits and the business which is not eligible is reporting loss, then this is not allowed. You cannot make any such type of adjustment. In that particular case, they say that we will revalue taking the fair market value. Then they are saying that again, if you are getting deduction under heading C, chapter 6A heading C, again the same thing cannot be availed under 35AD. So either you can avail under 35AD or you can avail under chapter 6A heading C, because both are linked with a particular type of business. So if the same type of business is covered in two different sections, or let us say in one section you are in specified area and in the other section you are doing a specified business and both are matching, you will not get both the deductions at the same time. Next, ATAB says the deduction will be allowed to the extent of income which you have computed as per the income tax provisions. Then it further says, if you remember above, we read a point which said that you have to claim the deductions in your return. This point says the return should also have been filed within the time limit, that is before the statutory due date. If you are filing the return late, you miss the deductions. So if you do not claim, you miss, or if you claim but you file the return late, in both cases, you miss the deduction. I hope this is clear to all. Now this, our module has given the list of what are those sections which provides deduction under the heading C, though not applicable to our syllabus, but just for a brief idea, you should know what are these sections. Out of this whole list of heading C, we have these three sections which are applicable: ATJJAA, QQB, RRB. And the effect of this provision is that in case you fail to file the return, or if you fail to file it before the due date, in either case, you will lose the benefit of the deductions. Fine. Okay. Then we started discussing the deductions. First was ATC. For ATC, I had given you two illogical logics. First was C means C. What? How many deductions I am giving? So let us say the government is telling you, see, I am so much dildar, I am so kind-hearted, I am so, caring for the taxpayers that I am giving you deductions for 23 different investments. And the other meaning of C is C for selfish. Why? Because here, wherever the payments are made and you are making it in the name of your family members, that is besides your own self, the deduction is allowed only if the payments are made for your selfish family. And who is selfish family? It is yourself, your spouse, and your children. Here in this section, there is no condition as to children major or minor, children dependent or independent, children married or unmarried. So in all cases, all children, in whatever form they are, you will be eligible to get the deduction. But if you make payment for any other person, like your parents or your brothers and sisters, even though they may be dependent on you, still you do not get deduction for payments covered in ATC. Now, what are the payments covered? You have two ULIPs, that is unit linked insurance plan. Then most important over here is the life insurance policy deduction, where you have to remember this cutoff date, which is 31st March 2012, or you can remember 1st April 2012. Now this 1st April or 31st March 2012 date. Yeah. So this 31st March 2012 date is the cutoff date. If your policy is taken before this date, that is 31st March 2012 or up to 31st March 2012, then the eligible deduction is up to 20% of sum assured. So whatever premium you are paying, you will compare that premium with 20% amount. If your premium is within 20% amount, you will get the deduction up to the amount of premium. If your premium exceeds 20% amount, you get deduction up to 20% of the capital sum assured. Then, if your policy is taken after 1st April 2012, the limit is of 10%. So everything else is same. Only the limit up to which you will be allowed this deduction is the policy amount multiplied by 10%. Correct? Now here, there is one small special carve out, that is in relation to persons who are covered in 80DDB or who are covered in ATU. ATU covers a person suffering from disability. 80DDB covers person suffering from specified diseases. We are going to study these sections today. So if you are making payment for them, then the limit is that if you are making payment to them, payment for them between 2012 to 13, that is for this one financial year, the limit is 10%. However, if you are making payment for them and the policy is taken after 1st April 2013, then the limit is increased to 15%. But this 15% is not applicable in normal cases. It is applicable only when the person is falling either in 80U or 80DDB. Then the other investment options given are deferred annuity plan. Then deferred annuity plan, again, this is for government employees, that was for private. Then this is what you have studied in salary chapter, where the payment is made in provident funds. Here it does not cover unrecognized provident fund, obviously, because since the provident fund is unrecognized, you are not eligible to claim the deduction for that particular provident fund contribution. Also very important, this point only covers contribution relating to your contribution, that is employee's contribution. If it is contribution by the employer, you do not get deduction for contribution by employer for provident fund. We get deduction for contribution for employer only in two cases. One is the 80CCD bracket 2 and the other is 80 some CCH. We will see those sections today. Then again, you have studied this in salary chapter, approved superannuation fund. Next is Sukanya Samruddhi scheme. So if you have taken this for your girl child, then you are eligible for this particular deduction. Next, when you withdraw amount from this, at that time also there is exemption under 10 section 10 bracket 11A. So such type of schemes are called as EEE schemes. What is EEE? Exempt, exempt, exempt. What is exempt, exempt, exempt? Means today when you are depositing, it is exempt. When over the period of the scheme, whatever you are earning, that is exempt. And even at the time of withdrawal, it is exempt. So few schemes are EEE schemes. Few other schemes are EET schemes. What is EET? Exempt, exempt, taxable. So today when you are depositing, it is exempt. Exempt means you are eligible for some benefit like deduction. Then over the period of the scheme, whatever is earned, accrued is also exempt. And then finally, at the time of withdrawal, it will become taxable. So few schemes or few benefits are under EET. This one is under EEE because today also you are getting the benefit of deduction. Over the period of the scheme, whatever interest is accruing, that is also exempt. And at the time of withdrawal also, the entire amount is exempt. Then you have the central government's national savings certificate. So if you deposit money in this, you are eligible for deduction. Here there is one more important point, that here every year some interest is getting accrued. Now the interesting part for NSC is whatever interest get accrued, you offer it under the head other sources as your interest income. Now there is no exemption for the interest income. However, since the amount of money which you have invested in NSC, that is National Savings Certificate, is refunded to you at the end only, the entire amount is given back to you at the end only, that is at the end of the period, which may be 8 years, 9 years, depending upon the scheme period. What it indirectly means that whatever interest you are earning, whatever interest is accruing, that interest is getting added, that is getting reinvested in the scheme. So interestingly, in this NSC scheme, in the first year, when you deposit money in the scheme, let us say you deposit 10,000, you get deduction under ATC under this head. In the second year, when interest accrues on this 10,000, which is not paid to you, which is again kept deposited in the scheme, that interest is first included in your income from other sources, but the interest is again shown as deduction under this section ATC. Why? Because the government is treating it as your deposit. Why? Because you earned this interest, but it was not given to you. So it is as good as you are reinvesting the amount of interest in the same scheme. So the best part of this scheme is till the period of this scheme is over, every year you are getting some deduction. So in the first year, you get deduction of principal amount deposited. In future years, you get the deduction of the interest which is getting accrued. Then contribution to annuity plan of LIC, subscription to notified schemes of mutual funds, contribution to notified pension plan set up by UTI mutual funds, then contribution to National Housing Bank, subscription to some other notified deposit schemes, the names are given. Then this is again important. This is where you are given deduction for the school or the college or the university fee that you are paying for your children. This deduction does not allows deduction for complete fees that you pay to the school. Out of the fees that you have paid to the school or college, only the component that represents tuition fee, only that component is eligible. Conditions are, it should be within India, the institution. Second, it should be for full time. And thirdly, the deduction is allowed only up to fees of 2 children. Correct? Acha, I'll tell you something very interesting. But for this, you'll have to recall your salary chapter as well. Now, if you remember, in salary chapter also, you were given deduction, or I'll say exemption rather, which is more appropriate word. And the exemption was linked to children. You remember? Children education allowance, children hostel allowance. Then even in case of 10.5, which was dealing with touring for LTC. Now, in all these cases, if you remember, there was a limit up to 2 children, correct? You remember this? The limit was up to 2 children. But then you also have some other benefits where the limit is not up to 2 children. Do you recall any such benefit where the limit is not up to 2 children? So you are putting chat. Okay, somebody saying if there are twins. Pranav, but that rule is applicable only when the second time you have twins. If in the first chance only if you have twins, then you are allowed only for 2 children. But if in the first chance you had 1 child and then in the next time you had twins, then those twins are considered as the second child. In other words, in that case, you are allowed for 3. Pranav. Oh, good. Hardik is saying that in case of children education perquisites, there is no limit of 2 children. You are right. Again, Aisha is correctly pointing out in case of clubbing also, 2 children limit is not there. Yes, Vaidahi, education facility because it is perquisites. Yes, Nitish. Anjali, you are saying 64A. What is 64A, beta? Good, good. Very good. So it means you all are into the subject. You all remember the subject and not only the current topic. Now, what is interesting? How to remember when there is a limit of 2 or how to remember when there is not a limit of 2. Okay. Hardik, under which section? But I think that is, they see, it is not that you will get exemption for, yes, so that's why I'm saying it is under perquisites only, correct? Now, do you all recall the section for perquisites? Section for perquisite? Okay, section 17 bracket 2. Section 17 bracket 2. Excellent. Okay, okay. Now tell me another section where there is no limit of 2 children, and that is clubbing. In clubbing also, when minor child's income is clubbed, Lahiri, I just want subsection. I don't want clauses. So in case of clubbing where the income of minor children is clubbed, over there again you do not have the limit of 2 children, correct? Do you remember the section number for that exemption? Chalo. Section, I want a complete section, beta. See, 64 is not the section. It is, I mean to say it is not, I'm wrong. I mean to say I want the section number for the exemption, because in exemption they are saying the limit of 2 children is not there. You are telling me the section under which it is covered under the head other sources. I don't want the section under which it is covered under the head other sources. You are giving me that section. No, 64 I don't want. 64 is not giving you exemption. Exemption is given by some section 10. Oh, so it is 1032. Excellent. Fine. Good. Now, check the above section of perquisite. It was 17 subsection 2. Check this section, that is section 10 subsection 32. Good. Now, let us go to all those sections which are giving benefit for children, but where the limit of 2 children applies. So give me the section which gives benefit for children other than these two, that is other than perquisites and other than clubbing, like children education allowance, children hostel allowance. But a section and subsection. Don't give me clause. Give me section and subsection. 14 is not the section, by the way, but you are close. Give me section and subsection only for children education allowance, children hostel allowance, for LTC. You are very close, by the way. Okay. Is it 10:15, beta? Hardik. Very good. Lahari. Hardik. Either you are making a haste in typing or either you are not knowing the correct subsection. Preeti, good. Lahiri, good. Nayan, 16 में कुछ भी नहीं है for children. Just a minute, students. Yes, give me these section numbers where you are given benefit for children. 1 second. Yes. सेक्शन बताइए यार, न रूल जाओ न कुछ और करो. Just give me section, because that is where the trick is. So pay attention. Listen to me. Wherever the subsection number has 2. So in subsection, if there is 2, limit of 2 children does not apply. But wherever in subsection there is no 2, that is subsection is 14, subsection is 5, here you are studying ATC bracket 1. So 2 is not there in the subsection, the limit of 2 children will apply. 2 is there in the subsection, limit of 2 children will not apply. Please go and check the act wherever you have benefit relating to children. I'm sure you'll find this. Is this okay? Understood by all? Will you remember this? And please check it. I hope everybody understood what I said. I repeat, for those if somebody has not understood me, see the sections, subsection. So I'm not interested in section number. I'm not interested in clause number. I'm not interested in rule number. You have to see the subsection number. Like for your minor child clubbing, it is bracket section 10 bracket 32. So there is 2 in that number. Similarly, for perquisite, it is section 17 bracket 2. So there is 2 in the subsection. So wherever you have 2 in the subsection, the limit for 2 children does not apply. However, wherever You do not have 2 in the subsection like section 10 bracket 14, 10 bracket 5, or this section 80C bracket 1. If there is no 2 in the subsection, limit of 2 children applies. Is this clear to all students? See, this is just a generic rule. There is no such thing. It is not having any legal backing. But if you study, if you write all sections together, because I had the habit of writing similar things, so that always helped me in bringing such analogies. So when I had the habit of writing, like if, for example, I find the definition of relative, and you will find that in different sections, like in salary also, like here also, you'll have different definition of relatives. Like in C, it is selfish family. But as we proceed, the definition will change. So I had the habit of writing all the definitions of related person at one place. Similarly, wherever I found the benefit for children, I have written at one place. So this helps me get some idea, like I can cook something like this, which helps me in remembering the provisions. Correct? Perfect. Now, next benefit is where you have taken a housing loan. So the amount attributable towards the cost, which is represented by the principal component, the principal component is eligible for deduction under 80C, whereas the interest component is eligible firstly for deduction under the head house property. Again, it is eligible for deduction here under section 80. We'll see that later when we reach that point. But first, it is eligible for deduction under the head house property. So here you get deduction for the housing loan principal. Let us proceed. Yes, you're right. One second. Somebody had put some doubt in bold, but I did not stop at that time because I was in a flow. Let me go back and check. Okay, Nitish. हैंडीकैप पर्सन का इंश्योरेंस 1/4/2012 से 31/3/2013 के बीच कराया तो 15% का डिडक्शन नहीं मिलेगा क्या? क्योंकि उसमें 1/4/13 के बाद वाले कैटेगरी में. यस बेटा, यू आर राइट नितिश. सो वेयर यू हैव टेकन द इंश्योरेंस for a person who is covered under 80U, that is handicap, or under 80DDB, that is suffering from some terminal disease, then in that particular case, if the insurance policy is taken between 1st April 2012 to 31st March 2013, your limit for the deduction is 10% of sum assured. If it is after 1st April 13, the limit becomes 15%. So actually what happened? After 2012, the cutoff date, they made it 10%. Later on, they got a lot of complaints, a lot of representation saying that you should give some extra benefit for physically challenged person. And the reason given was that insurance companies charge a higher premium, which is a correct thing. They charge higher premium for them. So when this point came to light, so they decided to increase the limit. So that is why they made it 15%. Fine. Okay. Then subscription to certain equity shares, debentures, then subscription to certain units of mutual fund. Most important, investment in 5-year term deposit. So where you have done FD, fixed deposit, which is also called as term deposit, and it is for a minimum 5-year, that is 5 or more, and it is with a scheduled bank, you are eligible for the deduction. Similarly, if that FD is with post office, again of minimum 5 years, you are eligible for deduction. Then investment in bonds of NABARD, then investment in the senior citizen saving schemes, and investment in NPS. Now see, NPS is already covered in 80CCD, National Pension Scheme. Then why it is covered over here? The reason is, you will see here, there are two types of NPS accounts. Tier 1, Tier 2. Tier 1 is covered in 80CCD, which is the normal account. And this is another account, which is Tier 2. So if you have taken Tier 2 category of account, in that particular case, it will be falling under 80C. But what it is said, Tier 2 account is the additional account under NPS, contribution to which would qualify for deduction under 80C only in the hands of central government employees. Correct? Okay. So I hope you have understood the entire list of 80C, all the points covered. Then you have two similar sections, 80CCC and 80CCD. Both are dealing with what? Both are dealing with payment of premium of pension plans. Now, 80CCC, I told you how to remember this section because as I gave you reference of an ad, if you remember, CCC is one of the famous ads. Rather, rarely I found ads of other companies. Mainly, it was of this ICICI Prudential only, which was for retirement solutions or for this pension plans of insurance companies. That is why, or that is how I remember 80CCC for insurance plan of pension plan category of insurance companies. And then comes 80CCD. This is very easy to remember because we all are well versed with CCD, cafe, coffee day, right? So you can go there, chit chat, enjoy. So 80CCD is the pension plan which is set up by government, and it is originally it was for central government employee. Later on it was open to all employees. Today it is open to everyone. So the government wants that you plan for your retirement so that once you retire, you can go and enjoy in 80CCD because you'll be having a good retirement fund. So that is how government really is concerned about you. It thinks for you. And that is why the section is 80CCD, which is the pension plan set up by the central government. Now, this plan has some very interesting parts. So first part is that 80C, 80CCC, and 80CCD, that is this current point, these three combined, the limit is 1,50,000. However, this 80CCD has two subparts more. What are these two subparts? These two subparts are one, where the contribution is made by your employer. There is no amount limit. There is only percentage limit, which is 14%. And if you are in the old scheme and you are not a government employee, it is 10%. Otherwise, it is 14%. And then this other extra limit is where you are making contribution to 80CCD. Firstly, that contribution is covered in the common limit of 80C, CCC, CCD combined 150. But if your contribution is more, you can get extra 50,000 over here. That is how this 80CCD gives you deduction in three parts. So first is subsection 1, 1B, 2. 1 and 1B, both are for employees' contribution. Now there is a limit on employees' contribution, which is again 10% of salary. And that 10% you'll first utilize in the common limit of 150. And even if after that, after utilizing it in common limit of 150, still some amount is left and it is fitting in the 10% limit, you can claim it over here additionally up to 50,000. So this is what is 80CCD limits. So see what it says. It is mandatory for persons entering the service of central government on or after 1st Jan 2004 to contribute 10% of their salary every month to their pension account. A matching contribution is required to be made by the government to the said account. The benefit of this scheme is available to individuals employed by other employers as well as now to self-employed individuals. Okay. This plan is today called as the Atal Pension Yojana. That is a plan which is notified for the purpose of this section. Now, what is the deduction? First part, your contribution. It provides a deduction for the amount paid or deposited by an employee in his personal account, subject to a maximum of 10% of salary. So firstly, whatever is your annual salary, which means basic plus DA forming part plus percentage commission, make a total of that. Of these three amounts total, find out 10%. Let us say that 10% comes to 1,20,000. So your limit for 80CCD for your own contribution is 120. Now, how will you utilize this 120 limit? You have to come to first 80C, find out 80CCC, add up both these. Now your total limit for these three sections combined is 150. Now ATC, CCC, this total itself is around 1,35,000. So what is left for you from ATCCD is only 1,515,000. So maximum what you can cover in the common limit of 150 is 15,000. However, you have a bigger amount available because your 10% was coming to 1,20,000. Out of 120, you could utilize over here only 15,000 because that was fitting in the overall limit of 150. So now they have allowed you additional 50,000, where out of this balance 120, you can claim that additional 50,000 over here. So first you find out the 10% amount. That 10% amount you fit in the common limit of 150. Whatever you can utilize in the common limit of 150, utilize it. Balance you can bring down in 1B and you can utilize for additional 50,000. Here, if you are a self-employed person, that is, you are not anybody's employee, in that case, only you are the person who is contributing. There is no other counterpart like employer who is contributing because you are self-employed. So for you, the limit has been raised and it has been made 20%. Also, since here you will not be having salary income because you are self-employed, so this limit of 20% is computed with respect to your gross total income. So for self-employed persons, the limit of contribution is 20% and this 20% is of gross total income. Now, deduction under ATCCD1, which is for your contribution, would be available to an employee only if he exercises the option of shifting out of the default tax regime under this section. That is, if he pays tax under the optional tax regime, that is the normal provisions of this act. So for your contribution, you do not get the benefit under the new scheme. You get the benefit under the new scheme only for your employer's contribution. Remember this. So for your own contribution, you do not have the benefit under the new scheme. Then you have additional this 50,000. It says ATCCD1B provides for an additional deduction of up to 50,000 in respect of whole of the amount paid or deposited by the individual under this scheme. So again, for your own contribution, you get this additional limit of 50,000. So first you utilize the limit under ATCCD1, which is up to 150, which is common. Thereafter, if there is any excess, you can come and get the deduction under 1B. Again, what is the point? The deduction under 1B would be available to an assessee only if he exercises the option of opting out. That is, you are in the old scheme. So new scheme is not giving benefit for any type of own contribution. Then this is the point where it says that firstly, you fit in the common limit of 150. You utilize that common limit of 150 along with the other two sections. Thereafter, you can go to the separate limit of 50,000. Yes, Nitish, I'll answer you. Give me some time. You get your answer when you come to a later section. So that is why I have kept it aside, right? Because see, already this section is very technical. If I start mixing too many things, it will go out of your control. Next, ATCCD2. Here we take the contribution made by the central government, state government, or any other employer in the previous year to the said account of the employee. It is allowed as deduction in computing total income. The entire employer's contribution would be included in the salary. Now see, firstly, whatever employer is contributing to your fund, it is a benefit for you. So firstly, you would have studied this in salary chapter also. It gets added in your income from salary. So employer's contribution is always added to your salary income first. So first you include the entire employer's contribution to your salary and then you come down and take deduction over here. Now, what it says, deduction under this section is restricted to in case contribution is made by central state government 14%, in case contribution is made by any other person 10%. However, if you are opting for the new regime, then you are getting the benefit of 14% of salary as the limit for employer's contribution. And this is the only deduction in this particular category of ATCCD which is allowed in new scheme. So ATC not allowed in new scheme, CCC not allowed in new scheme, ATCCD 1 and 1B not allowed in new scheme. Only ATCCD 2, which is the employer's contribution, and it is up to 14% of your salary, is the only deduction allowed in this category. Thereafter, whenever you will receive this amount back, at the time of closure or opting out, it will become your income. However, in this, they have given some relaxation. So where you are withdrawing this amount, lump sum up to 60% is outright exempt. Balance 40% also, if you deposit in another scheme, that 40% is also exempt for the time being. Similarly, if while you are in employment and you need money in between, it means the scheme is not yet closed, so you are withdrawing during the course of your employment, then again exemption is allowed up to 25% of the contribution made by you to that scheme till that date. So this is how it will be applicable. Kasak, this 14% which is allowable in new scheme, Kasak is asking, sir, 14% new scheme, whether the limit of 1,50,000 is also applicable. Chalo, I want answers from everybody. So I repeat Kasak's question for everyone. Kasak is asking me, ki, sir, in this new scheme where up to 14% is allowed, so will it also have the limit of 1,50,000? Who will answer Kasak's question? Will it also have the limit of 1,50,000? So 14% we studied, whether it will also have limit of 150. Nitish, it is not withdrawal, it is deposit. Yes, I'm waiting for more answers. Okay. Good. Anjali, Nayan, good. Nitish, partly good. Hardik, good. Dilip, good. Shibu, very good. Abhishek, no. Apurva, no. Bhaskar, no. Answer is 1,50,000 limit is applicable only for your contribution. Correct, Pallavi. It is not applicable when it is employer's contribution. For employer's contribution, there is no fixed amount limit. There is only percentage limit. So that is why the limit of 150 will not be applicable in the new scheme, because new scheme is allowing deduction only of the employer's contribution up to that 14% limit. And for that, the fixed limit of 1,50,000 does not apply. I hope this is clear to everyone. Good. Hardik, I'll answer this question. This was also, I think, Nitish question. So I told him he will discuss this. Nanda Beda, I will take that also. Let me first complete some sections, then we'll definitely take that also. Now, next is 80cch. You can say this is similar to above 80cc-D, because again in 80cc-H, firstly you get deduction for both your contribution, that is employee's contribution, plus employer's contribution. So this is the first point common between CCH and 80cc-D. Second point which is common is same like 80cc-D subsection 2, which is for employer's contribution, which is allowed in the new scheme. Similarly for 80cc-H bracket 2, which is for employer's contribution. Here also, under the new scheme, employer's contribution is allowed as deduction. So under both the schemes, 80cc-D, that is for pension plan, and 80cc-H, which is again similar to pension plan, but which is for the Agniveers, both are similar concepts, and in both the points are also similar, that these are the only two funds where you get contribution deduction for your contribution also and for employers also. For all other funds like Provident Fund, ESI fund, you get deduction only for your contribution, not for employer's contribution. Similarly, second important common point is that these are the two funds where the employer's contribution is allowed as deduction even under the new scheme. Otherwise, new scheme does not allow you deduction for other payments. Now, what is this scheme? This scheme is applicable to the new military proposal that the government is running for the new military entrants, which is called as the Agniveer scheme. Now, under the Agniveer scheme, whoever joins the military, for them, the rule is that each Agniveer will contribute 30% of his monthly customized Agniveer package to the individual's Agniveer corpus fund. And further, the government will also make a matching contribution. So just see, they are making a contribution of 30%. Further, the government will also pay to the subscriber interest as approved from time to time on the contribution standing in his account. So your contribution, government's contribution, and the interest. This is what is accumulating in this Agniveer fund. Now, Section 80 CCH provides deduction in respect of contributions made in the Agniveer corpus fund by the individuals enrolled in the Agnipath scheme and the central government. So you get deduction both in respect of your contribution, you are the Agniveer, the person who has been enrolled in military, and also the contribution by the central government, that is your employer. Now, how much is the quantum of deduction? 80 CCH1, which is for your contribution, provides deduction for the amount paid or deposited by the assessee being an individual enrolled in the Agnipath scheme and subscribing to the Agniveer corpus fund on or after this date. Again, this deduction 80 CCH1, which is for your contribution, would be available only to individual if he has exercised the option of opting out, that is under the old scheme. Second, under 80 CCH2, the whole amount of contribution made by the government to the said account of an assessee in the Agniveer corpus fund is allowed as deduction in computing the income. So whatever government has contributed, the entire amount of government's contribution is allowed as deduction under 80 CCH2, and most important, 80 CCH2 would be available to an individual irrespective of the regime. That is, it is also allowed in the new regime. The entire central government's contribution to the Agniveer fund would be included in the salary. So first it is included in salary, obviously, and then again it is allowed as deduction. Most important, exemption on payment from the Agniveer corpus fund to a person enrolled under the Agnipath scheme. So today you are contributing, you are getting this deduction. Tomorrow, when you will retire from this particular military, and you will be getting the amount back from the Agniveer or the Agnipath corpus fund, in that particular case, whatever amount you are getting, that amount would be fully exempt. Any questions up to this point, students? Any doubts with any of the points? Nanda Gopal, beta, that rule of 60% is applicable to 80 CCD. It is not applicable to 80 CCH. Fine, beta? Has everybody understood up to this point? Yes, Hardik. Entire amount which is in 80 CCH is allowed as deduction. अपूर्व अग्निवीर में पार्शल नहीं है. सी एक्चुअल में यहाँ पे भी पार्शल नहीं है. किसमें? 80 CCD में. 80 CCD में भी आप विड्रॉल पूरा कर रहे हो, जिसमें से 60% एग्जम्प्ट है और 40% टैक्सेबल है. वो 40% भी अगर आप इमीडिएटली रीइन्वेस्ट करते हो तो वो भी एग्जम्प्ट हो जाता है. सो अपूर्व, पॉइंट इज दोनों स्कीम्स में से यू आर विड्रॉइंग पूरा 60% तक एग्जम्प्ट है. यू आर नॉट विड्रॉइंग 60%, यू आर विड्रॉइंग 100%, क्योंकि एक बार आपका एम्प्लॉयमेंट खत्म हो गया तो यू विल विड्रॉ योर एंटायर फंड. बट इफ इट इज 80 CCD, 60% would be exempt, 40% would be taxable if you are not depositing it anywhere. But in Agniveer, entire amount is deduction. Yes, Nitish, you are right. That again, Nitish, I believe is similar to our salary rule. कि अग्निवीर में भी आपका जो 30% है वो किसका कैलकुलेट होगा. So I believe it should be same. बेसिक डीए फॉर्मिंग एंड परसेंटेज कमीशन. अब यहाँ पे कोई परसेंटेज आने नहीं वाला है बिकॉज इट इज गवर्नमेंट एम्प्लॉयमेंट. सो इट विल बी बेसिक प्लस डीए फॉर्मिंग पार्ट. यस प्रीति बेटा, व्हाट इज 3? Yes, beta. All these are applicable only to individuals. Nayan, it cannot be applicable to HUF because यहाँ पे जो employee है उसी के लिए fund बनाया जाता है. So there is no question of anybody else getting into the scheme. Hardik, as I said, normal rule will remain same. It should be basic DA forming part percentage completion. But I also said कि क्योंकि ये गवर्नमेंट एम्प्लॉयमेंट है यहाँ पे परसेंटेज कंप्लीशन वाला कोई ऑप्शन ही नहीं होएगा. करेक्ट ना? यहाँ पे आप मिलिट्री में काम करो, यहाँ पे कौन सा परसेंटेज कमीशन मिलना है आपको? Okay, so students, now we go to the next category. The category is D, and D for doctor. So when you are in this entire category D, you will have some or the other medical related deduction. Correct? So it is D for doctor. Now, in this series of D, the first deduction, which is 80D, is allowed for medical insurance premium, which is also called as health insurance. So we normally in our day-to-day life talk about this. Post-COVID, this has gained a lot of importance. People have started now again investing and spending on health insurance because they have realized that what happens if somebody has to be unfortunately hospitalized. So a huge amount is spent. So now post-COVID, people have started going more for the health insurance schemes. Now, this particular health or medical insurance scheme is available for deduction. Under 80D, deduction is allowed both to individual also and to a HUF also. Now, interestingly here, deduction is allowed for whose payment? So now we are not in C, so it is not selfish family. So then it is who? It is self, it is spouse, it is children, and it is parents. So in 80D, besides selfish family, one more family member is added. So here, if you are making contribution for your own medical insurance or for your spouse or for your children or for your parents. Now, interestingly, in 80C, there was no limitation or conditions relating to whether somebody has to be dependent on you for this deduction. But here in this section, out of all these people, they have made one person eligible only if that person is dependent on you. Now you logically tell me, out of this entire list of persons, who do you think would practically be dependent on you? See, this is how you can remember this section. Nanda Gopal, सोचो पहले. हार्दिक, सोचो पहले. दिलीप जी, सोचो पहले. Preeti, I asked कि in section 80 now, who all are covered? Yourself, your spouse, your children, and your parents. Now my question is, out of this, practically and logically, who would be that one person who would be dependent on you? This was my question, Preeti. मानवी, कौन से जमाने में जी रहे हो आप? अरे फैमिली कैसे आएगा बेटा, मेरे को एक पर्सन चाहिए, आपने पूरे फैमिली को डिपेंडेंट बना दिया. पल्लवी जी, यहाँ पे ग्रैंड पेरेंट्स है ही नहीं मेरे इस लिस्ट में. मैंने पूछा मेरे लिस्ट में से. नयन, आप क्या सोच रहे हो? सानिया जी, ब्रदर सिस्टर कहाँ पे है इस पूरे लिस्ट में? अंजलि, आप लोग कैसे सोच सकते हो कि पेरेंट्स होंगे लॉजिकली? हु विल बी डिपेंडेंट ऑन हुम? यू विल बी डिपेंडेंट ऑन पेरेंट्स और पेरेंट्स आर डिपेंडेंट ऑन यू. भाई इतना घाई मत करो बड़े होने का और उनको आपका डिपेंडेंट करने का. मेजर पार्ट ऑफ it is possible that your children are dependent on you out of this whole list. होने को कोई भी हो सकता है, बट प्रैक्टिकली लॉजिकली इनमें से सबसे ज्यादा अगर आप किसी भी फैमिली की बात करोगे और उसमें आपको बच्चे दिख रहे हैं, बड़े दिख रहे हैं, स्पाउस दिख रहा है, तो उनमें से डिपेंडेंट होने का चांस सबसे ज्यादा किसका है? चिल्ड्रन का। भाई ये मत सोचो कि पेरेंट्स एजेड हो गए तो डिपेंडेंट ही होंगे, भाई दे वुड बी स्टिल बी इंडिपेंडेंट इफ दे हैव देयर ओन सेविंग्स. They will not be dependent on you for any of their livelihood. They may be still independent, correct? They may be still providing you with funds rather than you providing them with any funds. Okay, whatever. Thank you, Nitin. Now, see how the sequence goes. Now, pay attention to me. I'm giving you some very interesting logics because otherwise, remembering in which section who are covered, when deduction is available, when not available, becomes slightly tricky, right? Now, the point is what? The point is in 80C, you had three persons: self, your spouse, your children, and I called it as selfish family, and there was no condition of dependency. So whether these people are dependent, still deduction is allowed. Whether they are independent, still deduction is allowed. Now you come to 80D. In this list of selfish family, they added one more person, which is your parents, and they brought in one condition, or for one person they brought in the condition of dependency. So see how the sections are growing. With every section they are adding one person, and with every section they are adding the condition of dependency. So for 80C, no one dependent. 80D, one person dependent. And then I asked logically, if you look at any family and if this is the composition of the family, who do you feel would be majorly dependent in that whole list? It would be children. So in 80D, deduction is allowed when children are dependent. Now here, if your children are not dependent on you and still you are paying their Mediclaim insurance, you will not get the deduction. That is what it means. Spouse, whether dependent, independent, in either case you will get deduction. Parents, whether dependent, independent, in either case you will get deduction. But children, you will get deduction only if they are dependent. Correct? Now, when we go to the next two sections, 80DD and 80DDB, see how the sections are growing. So in 80DD and DDB, in both these sections, they have added one more person in the list. So now in 80DD and DDB, who is added? You had your spouse, you had your children, you had parents, and now they have added brothers and sisters. So in 80DD and DDB, they have added your brothers and sisters. And again, the section is growing in terms of dependency condition. In C, there was no condition of dependency. In D, they made this condition for one person. And now in DD and DDB, they made this condition for everyone. So for DD and DDB benefit, you will be getting the deduction if these people, anyone for whom you are contributing, they should be dependent on you. Only then you are allowed the benefit. So see, this is how you can remember the section. This is how you can remember the condition. Otherwise, see, these are very tricky conditions and your answer purely depends upon remembering these conditions correctly. Because otherwise there is no special calculation in this whole chapter. The chapter is very straightforward. You will be given the payments. You have to only select the right payment, put it in the total, compare the total with the limit. That's it. The work is over. But for that, you have to first check whether you are eligible for that payment or not. Is this clear to all? Fine. Just give me 2 minutes break. Till then, you all can read this section further. Just 2 minutes. Okay, let us proceed. But a BAC is the section for old scheme versus the new scheme. So 115 BAC is basically the section which is now the new scheme, what we call as the new scheme, correct? And in that subsection 1A is that now new scheme has become the default and the old scheme has become the optional scheme. So wherever they are saying opting out of 11 BAC, it means you are opting out of the new scheme. This is what is 115 BAC bracket 1A. Fine. Good. So let us proceed then. Now, ATD is giving deduction where you have made payment in respect of what? Now, we have seen the heading as medical insurance, but there are other aspects to it. Firstly, a deduction is allowed in respect of insurance premium paid for your family, and family here means you know what. It is for premium to effect or keep in force an insurance on health of self, spouse, dependent children, or contribution to central government health scheme. It is nothing but mediclaim insurance of central government or such other health scheme as may be notified. So there are three types of policies covered. All are health insurance only. Now, in this particular case, the next point that comes is that where you are seeking deduction in respect of insurance premium for parents. What it says that a further deduction of 25,000 is allowed to keep or effect in force an insurance on the health of the parents. So for parents also, where you are paying the insurance premium, the deduction is allowed. Now, what is very interesting to note is that in this section, you are allowed deduction twice. This is first for the selfish family, you are allowed the deduction subject to a limit of 25,000. Again, you are allowed deduction by allowing you further 25,000, which is for your parents. So the point is that in this particular case, in section 80D, the limit what is given is applicable twice. Twice means first for yourself and then again for your parents. Further, as you can see in the box, it is further mentioned that this limit of 25,000 will increase to 50,000. When it will increase to 50,000, in case any of the person mentioned above is a senior citizen. So it means when you are making payment for your parents and parents are senior citizen, instead of 25,000, the limit that you are getting is 50,000. Also, when you are making payment for your own self, also self, spouse, children, if let us say you or your spouse are senior citizen, then the limit which is given over here of 25,000 will get increased to 50,000. So this is what is important. I hope you are getting this. So the point is that wherever the person for whom you are taking this insurance is a senior citizen, your limit increases from 25 to 50,000. Is this understood? Sir, ATDD, everyone should be dependent. Yes, you're right. Yes, Nanda. Now, in this section, firstly, we saw three payments. What were the three payments? All three were medical insurance premium. Now, they have included one more payment in this, and that payment is payment towards preventive health checkup. Now, interestingly, what is this preventive health checkup? Preventive health checkup is the health checkup which is done even before you fall ill. In other words, please understand this. Nowadays, people go to hospitals for doing various types of tests. They may not have still fallen ill or may have contracted any disease, but as a preventive measure, as a precautionary measure, they go to the hospitals for getting the health checkup done. And nowadays, also hospitals have multiple health checkup plans ranging from 5,000 to 50,000, which may be only basic blood tests, or ranging to everything, kidney, cholesterol, everything. And now is the season for this. In the next 3 months, suddenly you will find increase in ad for this. You will find multiple hospitals putting their hoardings or sending through flyers different types of packages, because as the year comes to close, people start planning their income tax, and for getting deduction, the best option is making one of these payments. So people prefer making the payment for health checkup because it helps them in also getting their checkup done, and plus they get deduction. However, here there is a criterion. The criterion is, see, your overall limit is 25,000 or 50,000. Within that, if you are doing preventive health checkup, the maximum amount that you should or you can spend for preventive health checkup is only 5,000. Another interesting point is all above payments that we have seen should compulsorily be by check or any other banking channel, all above payments. But for preventive health checkup, there is no condition that the payment should be by check or banking channel only. This you can understand from point number 4. So what does point number 4 says? Point number 4 deals with mode of payment. For claiming deduction under 80D, the payment can be made by any mode, including cash, in respect of sum paid on account of preventive health check. So preventive health checkup can also be in cash. But for all other payments, the mode should be other than cash. That is, it should strictly be through the banking channel. So this is what is the point that we are trying to understand. I hope this is clear. Any questions up to this point? Sir, if spouse is 61, then 50K deduction allowed. Am I correct? See, 50K will not be the deduction. 50K beta is the limit. So limit means what? Whatever payment you have done, compare it with 50K, whichever is lower is your deduction. So if your payment is 35,000, you'll get 35,000. Also, for getting this, you need not be 61. Even if you are 60 and you are a resident, you are termed as a senior citizen. So for getting this deduction or higher limit of 50,000, you need not cross 60. Even if you are 60, that is 60 years complete, you are senior citizen. Abhishek is asking total limit is 25 plus 25 or 50, etc. Okay, good point, Abhishek. See, the total limit is 25 plus 25 for parents. If parents are senior, the total limit is 25 plus 50. But you cannot check the limit by taking 75. For my category of selfish family, adding my payment, my spouse's payment, and payment for my children, these 3 payments you have to compare with 25. And only for the payments made for parents, you have to compare it with 25 or 50. So if my parents are senior, for them the limit is 50. For them means whatever payment I make for them. And the limit for myself, my spouse, children, total is 25. If we are also, myself, my spouse is also senior, then for our payment also 50. For my parents' payment also 50. Lahiri, preventive checkups are in one time only, because you go for checkup and you make the payment. If no one senior, then beta 25 for my category, 25 for parents. For self and spouse, for self, spouse and children, 25, parents 25. Yes, beta, you're right. Nayan. Tambeshwari, where there is double deduction, there is no double deduction, because I have made payment for my selfish family, I'm getting deduction for that payment. Plus I have made payment for my parents, I'm getting deduction for them again. The only thing is that to somehow you can say make people spend for their parents also, they have given additional limit for parents. So it is not double deduction. First limit is for me, and then again limit is for payment I make for my parents. Nanda Gopal, don't mix parents. It is yourself, spouse, children. First block, limit is 25. Parents, both mom, dad. Second block, limit is 25. If they are senior, limit is 50. Perfect, Nitish. Yes, beta, Hardik. 5,000 is for the total limit for the family of payment for preventive health checkup. I hope this is clear to all. Any further questions you all have, students? Tambeshwari is saying one self. Tambeshwari, you did not write one self, one spouse. So self, spouse, children, 25. And again for parents, 25. Yes, Lahiri, 5,000 is included. Yes, Lahiri, 5,000 is included in 2550. So for the overall category, the limit is 25. Within that, for one payment, the limit is 5. Nanda Gopal, it is not 50 maximum. It may be 75 also, or it may be 1 lakh also, depending upon who are senior in this. Yes, you're right, Dilip. Additional deduction for parent 25. Yes, perfect, Tambeshwari. What is that point, beta? Harshpreet, you're saying third point of section 80D. Third point. Achha, here you are seeing this third point. This third point, beta, we discussed now. If you are making payment for preventive health checkup, then up to 5,000 is the amount which you are eligible. Nitish is asking good question. Sir, ये payment in any mode other than cash किसी और section में भी है क्या? चलो, you all tell me. Good question, Nitish. मैं आपको एक hint दे सकता हूँ. है और वो ऐसा ही कुछ सिमिलर है. इतना ही मैं हिंट देता हूं, पर क्या है वो अभी आपको बताना है. सो नीतीश हैज अ गुड क्वेश्चन. सर, सेम कंडीशन, पेमेंट इन मोड अदर देन कैश, कहीं और है क्या? पहली बात, इन पीजीबीपी वी स्टडीड कि वेयर 40A सब सेक्शन 3 applies. Over there, if the payment is exceeding 10,000, it has to be by account pay, check, draft, or online medium. We are not talking about that. Nitish is not talking about that. Nitish is saying exactly यही condition. क्या other than cash? ये कहीं और है क्या? 100% है बेटा. और मैं उसके साथ एक और हिंट ये दे रहा हूं कि इट इज सिमिलर टू व्हाट यू आर स्टडिंग नाउ. पर क्या है, कहां पे है, वो आप मुझे बताएंगे. नहीं, 43 CA नहीं है. नहीं बेटा, वो जो 10,000 वाले रूल में कैश ये वर्ड है ही नहीं. हार्दिक, पल्लवी. यस नीतीश, यू आर राइट. मैंने आपको हिंट दिया है, ऐसा ही कुछ है. और वहां पे एग्जैक्ट ये कंडीशन है अदर देन कैश. वहां पे जो 10,000 वाला सेक्शन है ना, 40 कैपिटल ए सब सेक्शन 3, वहां पे अदर देन कैश ये कंडीशन नहीं है. ओवर देयर द कंडीशन इज इट शुड बी बाय अकाउंट पे चेक. इट इज नॉट अदर देन कैश. बोलो. नहीं रे. क्या है प्रिजम्पटिव टैक्स अदर देन कैश? नो. एटीसी में कहां पढ़ा हमने? आंसर इज सेक्शन 36. subsection 1, where employer is making payment of medical insurance premium for its employees. When employer makes payment for employees of their medical insurance premium, it is allowed as deduction under section 36 subsection 1. Same like here also it is mediclaim, over there also it is mediclaim, and in both these sections the condition is same. It should be for other than cash. Please check. Correct? But आप कौन सा देख रहे हो हार्दिक? See section 36 subsection 1, and if I'm not wrong, it is I think clause 4. Section 36 subsection 1 clause 4 PGBP head. Yes, Lahiris, where the limit is for parents, it is for both parents combined. Yes, Tambeshwari, 5,000 for preventive health checkup is for the family, not per person. हार्दिक मिला आपको? 36 subsection 1 clause 4 ही है ना हार्दिक? Six 1 2 1A. नहीं बेटा 4 नहीं है. I think it is 36 1 1B है शायद. यस नीतीश, 1B मुझे याद आ रहा है, क्योंकि 36(1) is for insurance of stock, 36(1)A is for cattle, and 36(1)B. हाँ पल्लवी, मुझे भी यही 36 subsection 1 clause 1B याद आ रहा है. नहीं प्रीति, clause 4A is employees contribution to provident fund. clause 4A नहीं है वो. I think it is 1B. No worries. Okay. Now, in this section, as we saw at the start, even HUF is covered. So where HUF is making payment of premium, for whom they are making payment, because HUF को तो खुद को तो medical insurance की जरूरत पड़ेगी नहीं. It is for the member of the family. So HUF अपने किसी भी family member के लिए अगर pay करता है medical insurance premium, so it will get deduction. Again वहां पे भी limit वही है, 25,000 is the limit. However, if what we say, the family member is a senior person, the limit will be increased to 50,000. Again here also the same condition, that the insurance policy should be either of GIC or of any other insurer who is approved by the government in this behalf. Now, there is one more deduction in ATD, that is this. Now see, understand this. Earlier to this, there was payment of premium of medical insurance, or there was payment on preventive health checkup. Now this is, you are making payment of the medical expenditure itself. That is, you are paying the bill of the hospital. So in the above provisions, it was making payment of the premium of medical insurance. Here, it is making payment of the medical bill itself. Now the question is, when you are making payment of medical bill, why it is given deduction? The answer is, many times when you are a senior citizen, that is you have crossed 60 years, insurance companies do not give you insurance policy itself. So the section is designed that where you are having insurance policy, that is mediclaim policy, You make payment of premium, we give you deduction. And then the same section says where you are not having insurance. Why? Because the insurance company is not giving you insurance policy because you are a senior citizen. In that case, when you make payment to the hospital for the treatment, we will take that expenditure itself and we will give you deduction. And now since here you are senior citizen, because this point is applicable only for senior citizen, that is why they have given the limit directly as 50,000. So since the person is senior citizen, insurance companies are not giving them mediclaim. Hence, for them, the section says we give you deduction of the medical bill itself. I hope this is clear to all. Yes, students, any doubts? Students, any doubts? Yes, yes. See, this 50 is also in the overall limit of 50 only. This is not extra. Your limits are free. Self, spouse, children, 50. 25. And parents also 25. If any of us are 50, the limit is 50. The point is, this payment is also part of this category only. But why they have directly given the limit of 50? Because this payment is applicable only when you are a senior citizen. And if you're not having an insurance policy. Yes, Vaidehi. So in HUF, any family member or karta can be senior. You're right. Now, another point is, what if instead of making payment of premium every year, you decide to make payment of 10 years premium at one go? So let us say you are taking the health insurance policy and you are telling the insurance company ki baba, I may not be able to pay your premium every year. This time I have a lump sum amount. Like let us say somebody has retired and got some money from Provident Fund at the time of retirement. So that person wants to secure his or her future. So it will go to the insurance company saying that you do one thing, you give me health policy for next 10 years and I will make payment lump sum for the 10 years premium now, because I don't know whether I'll be able to earn and save in the future, but at least I want to ensure that my medical expenses are taken care of. So give me 10 years combined mediclaim. So in such a case, where you are given a combined mediclaim, in the first year itself, you have made payment for 10 years, but I will give you, or I want to give you deduction in all the 10 years. So they say that what we'll do, we'll take appropriate fraction. And how is this appropriate fraction calculated? Whatever is the premium that you have paid divided by the number of years. So if it is 10 years in my example, you divide it by 10 years and you are allowed deduction in every year. This is okay. That is section 80D. Okay? Any doubts, students? Up to 80D? See, every section has some or the other flavor. Somebody is pav bhaji. Somebody is litti chokha. Somebody is bhel. So you have to take flavor and you have to take and you have to enjoy every flavor, right? Yes, Abhishek, you said you asked a doubt. What is your doubt, beta? Abhishek, what is your doubt? 6.36. 6.36. Third. The 6.36 में third क्या है नीतीश? Yes, Hardik, 3611B, correct. Abhishek, you are saying third condition. Keep in force. मेरे को question अभी भी नहीं समझा बेटा. See, you take insurance policy, that is taking policy. And once you have taken policy, every time you keep on paying the premium so that you get the benefit of the policy again and again. This is what is keeping the policy in force. In force means renewing the policy. Correct? 3.36. नोट को समझा दीजिए जो ऊपर साइड ऑफ पेज पर लिखा है. Note, in case the individual or any of his family members is a senior citizen, the aggregate deduction in respect of payment of premium, contribution, medical insurance specified in 1 to above cannot exceed 50. In case one of the parent is senior who is covered under the medical policy, and another is also a senior but not covered under the medical policy, the aggregate deduction in respect of payment of medical insurance and medical insurance as specified cannot exceed 50. बेटा ऊपर जो अपन ने सिंपल वर्ड्स में पढ़ा नीतीश, वही यहाँ पे वापस दिया है कि when you are taking out the policy and the person for whom the policy is taken out is a senior citizen, then the limit which was 25 will now become 50. But whenever they are talking about limit, like what we call as limit, instead of calling it as limit, how they write, they say that the deduction cannot exceed 50,000. So in other words, they are saying the limit of deduction is 50,000. So here first is when it is about selfish family. Here second is when it is about your parents. I hope this is clear. Good. Should we proceed? Next comes the next deduction, 80DD. 80DD. The illogical logic is disable dependent. So if somebody is dependent on you and is suffering from disability and you are making the payment on the treatment of that person, in that particular case, you get deduction under 80DD. So what is 80DD saying? 80DD is saying that there is somebody who is dependent on you and that person is suffering from disability. In this particular case, if you are making payment for that person's medical treatment or you are making payment under a special scheme framed by the insurance for such persons, in that particular case, the deduction that you get is under 80DD. Now, there are some very important aspects of 80DD. First, you are not covered here. Now, then the question will be, sir, what if the person himself is disabled? So now listen to me. If you are disabled, because I said in 80DD, you are not covered. But what if you are disabled and you are not dependent on anyone? It means you are independent. You can make your own expenses because you are earning. So if you are disabled, but you are not dependent on anyone and making payment for your own medical treatment of disability, you will get deduction under 80U. I hope I made some sense. DD, I mentioned, does not cover your own self. DD covers the other persons who are dependent on you, your family members, which covers spouse, which covers parents, which covers brothers, sisters now, and which also covers your children. So all these people who are now covered in DD, if you remember, I had mentioned DD, even siblings are covered. So now DD covers whom? It covers your spouse, it covers your brother, sister, it covers your parents, it covers your children. Correct? So this whole circle, your family, is covered, but you are not covered. But if you are disabled, but you are independent, you are making payment of your own expenses, you will get deduction under 80U. U, capital U, the last section of this list. So both these sections, yes, beta, this section is for disabled dependent. So the person has to be disabled. If the person is not disabled, like you and me, if we are not disabled, no deduction. Correct? Now, DD will cover only payment for the dependents, that is all the other family members. You will cover payment for yourself. And both these sections otherwise are totally same. The only difference is whose payment you are making. Your own self, for your own self, if you are making payment and you are disabled, go to ATU for getting deduction. If you are making payment for dependents on you because they are disabled, you get deduction. Now, the most significant part of this section is in all other sections that we are studying, we have already studied, we will study whatever amounts are given are the maximum limits. Like in ATC, it was 150. ATD, which we just saw, the limit was 25 or 50. In further sections, whatever amounts are given, that is the limit. But remember one thing, in this particular section, there is no limit. Rather, the amount given is the flat deduction. What do I mean by flat deduction? In other sections, what happened? You paid 5,000. Limit is 25. How much deduction you'll get? You'll get 5 only because all the other sections are giving limit. So your deduction will be limited to that much amount. So your actual deduction in other sections is payment or limit, whichever is lower. This section, DD and U, is giving a flat deduction. Means what? You have spent only 100 rupees. Nitish, flat bole to flat. Flat bole to flat. Nitish, flat bole to fixed. Means what? That even though you have made payment of only 100, still your deduction is 75,000 flat, fixed. And if the disability percentage is 80% or more, which is called as severe disability, you have spent only 100, you get flat deduction of 1,25,000. So 75,000 flat fixed deduction, irrespective of amount spent. And if the person for whom you are spending is suffering from severe disability, where the disability percentage is exceeding 80, it is 80 or more, then irrespective of amount spent, the deduction is flat 1,25,000. I hope you got the meaning of the term flat. Flat here means fixed, irrespective of your actual payment. This is the amount which I will be giving you as deduction. In all other sections, it was whatever you pay compared with the amount which is the limit given, whichever is lower is the deduction. Because in all other sections, the amount is your limit. In this section, the amount is the deduction. Only you need to satisfy the criteria. The criteria is that if you are individual, you are spending on one of these dependent persons. And you are spending on what amount? You are spending on their medical treatment. Now, since they are disabled, you are spending on their medical treatment, which may include treatment, nursing, or their training rehabilitation. Or you have deposited in a special scheme which the insurance company has created for them. In this particular case, if you satisfy this, you get deduction. बेटा 25,000 एक्स्ट्रा कहां से आ गया आपके पास? एक्स्ट्रा के लिए आपके पास कुछ अमाउंट होना चाहिए ना कंपेयर करने को. ये एक्स्ट्रा मुझे नहीं समझा. तंबेश्वरी, व्हाट इज एक्स्ट्रा? I get deduction 125. That's it. Where is there extra? How can you say it is extra 25? I didn't get extra. Pallavi beta, what is lower amount is paid? I gave you an example of lower amount only. You spent only 1,000 rupees. Still, I am giving you deduction of 75,000. Are you getting my point? Yes, obviously, beta Nanda. That is the rule. Beta, Preeti, you will get deduction of 75,000. That is what this special point of this deduction is. Apurva, beta, who is disabled in your point? If in your point you are disabled, you go to ATU and get deduction there. If your family member is disabled and you are making payment for them, you get deduction under ATDD. This deduction is only for dependent persons, and for yourself, if you are disabled, the section is ATU. The section 80 and 80, sorry, ATU and ATDD are replica. The only difference is for spending on your own treatment, you take deduction under ATU. For spending on treatment of your brother, sisters, parents, or spouse, whoever is disabled, you take deduction under ATDD. बेटा, आपने अगर 100 रुपए भी स्पेंड किए, यू विल गेट डिडक्शन ऑफ 1,25,000. अब अगर आपने 1 लाख स्पेंड किए तो भी आपको डिडक्शन 125 का मिलेगा. उसमें आप जो पूछ रहे हो कि 25,000 का क्या करना है, कुछ नहीं करना है. यू हैव स्पेंड 100, आई एम गिविंग यू डिडक्शन ऑफ 125. दिस इज व्हाट इट मीन्स. तो आपको 25 का क्या करना है, आपको डिडक्शन पूरा फ्लैट 125 लेना है. दिस इज व्हाट द सेक्शन इज. Yes, so the person is getting disproportionate benefit. आपने जितना स्पेंड नहीं किया उतने का बेनिफिट मिल रहा है. That is the special point of this section. Dilip, I'll explain what it is. It is misutilized, beta. It is misutilized. Hardik, you're right. People are, for the purpose of claiming exemptions and deductions, making fake documents, giving fake proof. कितने बार तो प्रूफ वगैरह कुछ नहीं बनाते, वो डिडक्शन ले लेते हैं कि बाद में जब ऑफिसर चेक करेगा तब हम उनको प्रूफ बना के देंगे. वैसे भी कितने केस में आपका असेसमेंट होता है इन इनकम टैक्स? हार्डली 5 to 6% केसेस आर ओनली कमिंग अंडर असेसमेंट. इसलिए तो अब गवर्नमेंट धीरे धीरे सब कुछ लिंक कर रही है विथ योर, इट इज मेकिंग इट सिस्टम ड्रिवन सो दैट मैक्सिमम थिंग्स कुड बी चेक. प्रेजेंटली इनकम टैक्स रिटर्न्स में से 5 to 6% ही चेक हो रहे थे, इसलिए पीपल वर क्लेमिंग फेक डिडक्शंस. और इसीलिए तो अब ये न्यू स्कीम क्या है, people are not understanding the basic ideology of new scheme. New scheme is simplifying the income tax law by removing all the scope for all these type of fake deductions. क्योंकि आप पहली बात फेक डिडक्शन लोगे, फिर मुझे एक पूरा मशीनरी बिठाना पड़ेगा जो फेक डिडक्शन ढूंढेगा, चेक करेगा, फिर वो असेसमेंट चलेगा 1-2 साल तक. इससे अच्छा अगर मैंने डिडक्शन नहीं दिया तो ये सारा झंझट बच जाता है. अब आप बोलोगे सर मगर इसमें मेरा नुकसान होगा, तो नहीं होगा, बिकॉज इफ आई एम रिमूविंग द डिडक्शंस I am also lowering the tax rate. Yes, Nanda Gopal, that disabled person should be one of these persons जिनका नाम लिया है. Spouse, brothers, sisters, parents, children. Correct, Apurva? Now, how to determine what is the percentage of disability? So whenever a person is disabled, whenever you go to a doctor, on the basis of your testing, checking, they determine or they give you what is the percentage of disability. So like if the person is blind, blindness may be 100%, it may be 90%, it may be 70%. Like a person may be able to see something during daylight, but nothing during the night, or the person may be able to see only up to a distance of few meters. Thereafter, the person may not be able to see. So that is also a type of blindness, but that is the percentage of blindness. So that is an example of percentage of disability. Yes, Nanda Gopal, no other relatives are covered except the one whose name is mentioned over here. This is a good question. Now, let us say within this list of dependent persons, 2 or 3 persons are disabled. Important point is this amount, which is flat amount, fixed amount, is not per person. So whether 1 person is disabled or 2 are disabled or 3 are disabled, I will get the same amount as deduction. That is 75,000. If out of these 3, 1 is severely disabled, other two are normally disabled, my amount will become 125. But I will get the amount once. I will not get the amount per person. So even if 2 or 3 persons are disabled, the amount of deduction remains same. It will not get multiplied by the number of persons who are disabled. Is this clear, students? Yes. Good. If you have any more questions, please ask. Because as I said, this chapter has no working. You have to only identify from the question whether I'm eligible for deduction or not, and if yes, up to what amount. That's it. Nothing else is required in this chapter. Like other chapters, you require some calculation, some plus, minus something. Here, no workings. Here, simply it is, you have to identify whether it is applicable or not. Yes, Hardik, I'm coming to that point. I'm waiting for everyone to get their doubts cleared up to this stage. Sir, DD not per se deductible. I did not get your question, beta. DD not per se deductible in both these sections. Sorry, not able to understand the question. Please put it in different way. Now, deemed income. If you remember, I had mentioned these benefits are of two types, EEE or EET. EEE means today when you are paying, at that time also it is benefit, that is deduction. When income is accruing, that time also it is benefit. And at the end when you are receiving the amount, at that time also it is benefit, it is EEE. But if at the time of receiving the amount, if it becomes taxable, it is called as EET. Now some schemes are EEE, some schemes are EET. Now what it says in this particular point, deemed income, it says that the person who is disabled, so let us say out of this list of family members, let us say brother is disabled and the brother passes away. Now you made two types of payment for getting the deduction, either the medical treatment or a special insurance policy. Now if you have taken a special insurance policy, in that case, if this particular person who is disabled, if the person passes away, obviously the policy amount will come to you. In that case, it will be taxable in your hands. So that is what is deemed income. If the dependent being the person with disability predeceases means the person expires before you. That is what is predeceases. The individual or the member of HF in whose name subscription was made. So I was making the subscription. Then the amount paid or deposited under the said scheme would be deemed income and chargeable to tax in the hands of the assessee or the member of HF in the previous year in which such amount is received. So if I receive the amount because of the death of the dependent person, then the amount is taxable in my hands. Now let us say vice versa happens. Means I die before the person. So the disabled dependent person is alive and I die. In that case also the payment is received. That is what is the special policy over here. In that case also the payment is received, but now the payment is given to the disabled person because actually the policy is for his or her benefit. That if something happens to me who is taking care of that person, then that disabled person will get a lump sum amount so that the disabled person can use it for his remaining life and taking care. In that particular case, when the disabled person receives the payment because of my death, it will be exempt. But if it is other way around, I am receiving the payment because of that disabled person's death, it will be taxable in my hands. So, however, such deeming provisions would not apply to the amount received by the dependent being a person with disability before his death by way of annuity or lump sum under the scheme mentioned in 2 of A above, that is when the individual or member attains the age of 60 or more and the payment or deposit to such scheme has been discontinued. So in simple words, whenever the payment is received by the person who is dependent One, either because of my death or because now I attain the age of senior, so I cannot now continue the scheme, I cannot deposit in the scheme. So in any of these cases, when the dependent person receives the payment, it is exempt in that person's hands. So this is what is the answer, Hardik. So even if nobody dies, the policy will end at one particular date. At that time, obviously the policy is taken out for the benefit of dependent disabled person. So it will always be given to that person. In that particular case, it will not be taxable. Correct? Pallavi, sir, if there is pension for disabled person who is alive and is minor receiving by its parents, Bapre, such a complicated. Sir, if there is pension and the pension is for disabled person, oh good, who is alive and who is minor? I don't understand this. How can there be a person who is minor and receiving pension? But fine, if I go by the face value of the question, who is alive is minor, receiving by its parents on his behalf, but it is exempt. This is what I understand, but I don't understand the question, because how can a minor be getting a pension? But fine. Now, who is covered in this section? The word used was dependent. Now, who is dependent in case of individual? It is the spouse, it is the children, it is the parents, or it is your brothers and sisters who are wholly or mainly dependent on such individual and not claim deduction under ATU. So either they can claim the deduction or you can claim for them. So if they are paying for themselves, they will claim under ATU. If you are paying for them, you will claim under ATDD. But for the same payment, they are and you both cannot claim deduction. That they will also claim under ATU because they are disabled, and you are claiming because your dependents are disabled on you. So for the same payment, both cannot get the deduction. In case of HUF, who can be this dependent? A member of the HUF wholly or mainly dependent on such HUF and who has again himself not claimed the deduction under ATU. So for same payment, to both sections cannot give deduction. That is anyways the common rule everywhere. Now, ATDDB. First D is for dependent. The second DB is for diabetes. Actually, this section is not covering diabetes, but just to make this section relatable. So dependent diabetes, this is how I remember this section, DDB. Now, why I have used this terminology dependent diabetes? Because this section covers the scenario where either myself, now here I am covered. For me now there is no separate section. So either myself or any of these family members who are dependent on me are suffering from severe disease. Diabetes is not a severe disease. I've just used that particular terminology so that the section number is relatable and I can remember. It is DDB. So in this particular case, where myself or any of these members are suffering from some severe disease, and again I'm making payment for the treatment, this deduction is applicable, that is DDB. Pallavi is asking, brother is minor, severe disabled, he gets pension of 1500 per month. Okay. Now, deduction in respect of medical treatment. Now, this is medical treatment of specified diseases. Now, who all are covered? This section provides deduction either to assessee who is individual resident in India and also who is HUF. Now, who all are covered? In respect of individual, again the same list: spouse, children, parents, brothers, sisters, wholly mainly dependent. In case of HUF, it is the member of family wholly mainly dependent on such HUF. Now here, again, you are given a limit. The limit is 40,000. And if the person for whom you are making this payment is a senior person, that is of the age of 60 or more, then the limit becomes 1 lakh. So there are two limits: 40,000 if the person is not senior for whom this expenditure is made, and if the person for whose treatment this expenditure is made is senior person, the limit of this deduction is 1 lakh. Again, this is now limit. So whatever you have spent compared with the limit, whichever is lower is your deduction. Again, what is the condition? No such deduction shall be allowed unless the assessee obtains a prescription for such medical treatment from the neurologist, oncologist, urologist, hematologist, immunologist, or such other specialist as may be prescribed. So depending upon the type of disease, you have to take a certificate from the expert of that particular disease. And on the basis of this certificate, this deduction is allowed. Is this clear to all? Any questions with both these sections, DD or DDB? Also, DD is read with 80U because both are same sections, only different persons are covered in that. Good. Could we proceed? Now, E for have been taken for the purpose of pursuing higher education. His higher education, that is of the individual, or for the purpose of higher education of his or her relative. The loan must have been taken from financial institution or approved charitable institution. Now, for whose loan or for whose higher education loan you will get deduction either of your own or of your spouse or of your children. Now see how the section is expanding. For self loan allowed, for loan of spouse allowed, for children allowed. Now, obviously, parents will not be possible because it will be rarest of rare case where your parents are pursuing higher education and you are paying for that. So that is the rarest of rare case. I will not say it will not happen, but it is the rarest of rare case. So that is not possible generally. So that is not covered. Parents not covered. So brothers, sisters are also not covered. So if you remember the sequence, they first added parents and then they added brothers, sisters. Now, if parents are not covered, brothers, sisters are also not covered. So these two people are out logically because parents will not be covered. So these are also not covered. But as every section is adding person, so here they have added one more person. So these two persons are removed, but one person is added. Who is this one person who is added? He is the person for whom you are the legal guardian. So who is this person? This person is your legal ward. So you have taken higher education loan for your own education, education of your spouse, education of your children, or education of that particular child for whom you are appointed, nominated as the legal guardian, who is called as your legal ward. Right? What is higher education? It is any course of study. This is best. Few years back, this section had made a specific list that only engineering, medical, MBA, only these education courses would be covered. Now they have said any course is covered, which also now includes vocational courses, which are pursued after passing the senior secondary exam or its equivalent from any school, board, university recognized by the government, central or state or local authority, or by any other authority authorized by the central government, state government, etc., etc. Therefore, interest on loan taken for pursuing any course after 12th or its equivalent will qualify for this deduction. So it should be a course after standard 12. So if up to standard 12 we have taken a loan, no deduction. For anything beyond standard 12 we are taking a loan, it is eligible. Now comes the most interesting point. The period of deduction. You get deduction for 8 years. How many years? 8 years. So the deduction is allowed for 8 years. Yes, Dinesh, it covers our professional courses also. Now, when you take a loan, you will be repaying the loan. Now, interestingly, in all other sections, there was a monetary limit that the deduction is limited up to 50,000 or up to 150 or up to 25. Here, they have not given monetary limit. They have given time limit. So here the amount can be any amount. There is no restriction on amount. Here they have given a limit that we will allow deduction for 8 years of payment of interest. So for first 8 years, the interest that you are paying is eligible. Nanda Gopal, I know module has written 7, but please read the condition. It is 8 years. I can also see the module has written 7, but it is 8 years. Please read. How come I'm saying it is 8 years when the module is saying 7? No, beta Hardik. How can 7 AYs is equal to 8? 7 AYs will be equal to 7 only. Yes, Nitish, you are right. Please read the module language, students. Bapre. Why all you all are getting into the AYPY business? It has nothing to do with AYPY. AYPY, if you are saying like this, then it is confusing. Read the section clearly. Yes, yes, very good. Pallavi, Abhishek, Pranav, Sukhveer. What you are saying is perfect. Others, please read. Yet, yes, Kasak, Abhishek, very good. Yes, Nitish. Yes, now Hardik, you have got the point. So it is saying deduction is allowed in computing the total income in respect of the initial assessment year. Now, why this word initial assessment year is used? Because we are talking about education loan. Generally, education loan repayment does not start immediately. Like let us say you are taking up some medical course or MBA course. So there is a moratorium period. Moratorium period is a period during which the bank will not recover any amount. So let us say moratorium period is 2 years in case of MBA. So they will say that after 2 years, we will start recovering the loan and the interest. So their logic is you are taking loan, you study, you get a job, start earning and repay the loan. So that is what is a moratorium period. Now, the initial year is the first year from which you start paying the loan. That is the initial year. And after the initial years and 7 years immediately succeeding the initial. So after the first year, which they have called as initial, further 7 years. That is how it becomes 8. Correct? Loan can be taken from whom? Financial institution that we already know, banks, etc. Or it can be from approved charitable institution. Who are these approved? It means institution established for charitable purpose and approved by the prescribed authority under section 80G. So there are many institutions whose main object is promoting education, and how they promote education, they provide eligible students with monetary support so that they can pursue higher education, and after getting qualified, they can return the money to the trust. So such trust loan is also eligible. And if you have taken loan from banks, that is also eligible. Yes, Nanda Gopal. Now you are right. Kasak, that depends from bank to bank. Every bank has their policy. What is the moratorium period? Whether they allow it if parents are paying the loan, or whether they will allow only if you are taking the loan for yourself and you are going to pay. So different banks have different types of products for education loan. So it may start immediately if they are not allowing any moratorium period, or it may start after a gap of 2-3 years. That is the moratorium period. Now, the next two sections, 80EE and 80EA, both these are dealing with the same thing, that is interest on housing loan. 80EE, 80EA, both deals with interest on housing loan. Now you'll say, sir, how can there be two deductions for the same payment? The answer is because of the date of loan. This section applies 80EA if the loan is sanctioned between 1st April 19 to 31st March 22. This is when 80EA applies. And here also in the condition they have said that the individual has not claimed deduction under 80EE. What is 80EE saying? 80EE applies when the loan is sanctioned in the previous year 16-17. So this is the main difference. So nobody can fit in both the sections at the same time because both the periods are vastly different. So here the loan was sanctioned in the previous year 16-17. So you fall in 80EE. Here the loan was sanctioned in the year between 1st April 19 to 31st March 22. again you are eligible for this deduction. Now, interestingly, the point is that you have already got this deduction where you have got this deduction under the head house property, because the house property head is already giving deductions for interest. Yes, Kasak. Yes, Hardik. Yes, Abhishek. Correct. In section 24 clause B, you get deduction for interest paid on the housing loan principal. Sorry, not principal. Principal is in ATC. In HP head, in 24 clause B, you get the interest component as deduction. Now you will say, sir, if I've got the interest component over there, how can I get the deduction again over here? The answer or the reason is over there, you have a limit of 2 lakhs. If you remember, where the property is self-occupied, the limit is of 2 lakhs. Now, if your interest is exceeding 2 lakhs, house property head will still allow you deduction up to 2 lakhs because this is their limit. For the payment beyond 2 lakhs, you come to 80EE or 80EA. Is this clear? But it is not necessary. It is not necessary that entire interest will be allowed here also. Why? Because these sections have their own criteria and conditions. What are the conditions? The stamp value of your house should not exceed 45 lakhs. This is in EEA, and in EE, the condition was that the value of house should not exceed 50 lakhs and the loan value should not exceed 35 lakhs. So EE had condition that house value not exceeding 50 lakhs, loan value not exceeding 35 lakhs. EEA says that the value and which value, stamp value of the house should not exceed 45 lakhs. Here there is no criteria for the loan amount. Correct? Further condition is individuals should not own any residential house on the date of sanction of loan. So in other words, this is your first house, and for this house, for getting this house, you have got this loan. Similarly, assessee should not own any residential house. So the basic point is this is your first house. Now, what is the period of benefit? The period of benefit is until repayment, but here there is a limit. The limit is 50,000. So effectively, up to 2 lakhs, you get deduction under 24 clause B. Above 2 lakhs, you are eligible to claim here. Now, EE has the limit of 50,000 and EEA gives you a higher limit of 1,50,000. So over and above the 2 lakhs limit that you have in 24 clause B, you are allowed up to 1,50,000 interest in this particular section. So this is what is EE and EEA. Now, another section for interest is EEB. Now, if you see the entire series of E is dealing with interest, because as you had C for selfish, in the same fashion, you have E for interest. So entire E series is for interest, where first E was for interest on education loan, then EE and EEA are dealing with interest on housing loan. EEB is dealing with interest on electrical vehicle purchase. So you have taken loan for purchasing electrical vehicle. Now for such an electrical vehicle, the interest that you would be paying on this particular loan is eligible for deduction. What are the conditions? Loan should have been taken for purchasing the electric vehicle. Loan is sanctioned between 19 to 23. Loan is taken, or it should be sanctioned by some financial bank or NBFC. You should be an individual, and the limit is 1,50,000 for the interest. Hardik is asking, when there is loss on HP, and if assessee has more income, then he can claim here. So beta, it is your choice, because over there you can claim the deduction up to 2 lakhs, and if that 2 lakhs is your loss, you can set it off against other incomes. But if your interest is above 2 lakhs, anyways you have no scope under the head HP. So you have no option but to come here, and if you are satisfying the conditions, you can claim the deduction here. Another question of Hardik is, sir, this means if my HP self-occupied, I can take interest deduction max of, yes, you're right, up to 2 lakhs in the HP head and up to 150 in 80EE. So the total interest that you will get benefit is up to 3,50,000. Again, we are talking about old scheme, not new scheme, because new scheme, both the benefits are not there, neither 2 lakhs nor this section. Then 80EE additional deduction. Yes, Abhishek, you are saying the same thing, correct. Is it applicable only on e-vehicle? Yes, Riddhi. This 80EEB is only for e-vehicle loan, because see, government brings in certain policy or they have some vision, and then for promoting that policy or vision, they give different types of benefits. Like in certain states, the state government was also giving some subsidy on purchase of the e-vehicle. So e-vehicle may be costing 2 lakhs, but you are getting it for 1,15,000, 1,20,000, because balance amount is given by the government or it is borne by the government, which is a type of a subsidy which the government is providing for e-vehicles. So now, anyways, we are having the target that we have to reach the zero emission norms. And for that, the first thing is that we want to switch our consumption to natural or renewable resources. And one such is the vehicle. So in our vehicle policy, we are having this new vehicle policy of switching to e-vehicle. And for promoting that, you have all these benefits. Just give me a minute. Okay. I hope all provisions up to this is clear. You're right, Abhishek. If you are purchasing EV now, obviously the loan will be sanctioned now, for which now there is no deduction, because only loan sanction up to 31st March 23 was eligible for 80EEB. Thereafter, 80EEB loan is not available, or this section deduction will not be available. Fine. Chalo. Let us meet God. Let me also take some rest. Fine. Now see the impact of God. The section before God and after God, both are extinguished. Both are non-existing. What is before G? F. And what is after G? H. These two sections today are not there in the Act also. They have, both are non-existing. So the section 80F, it was there at some period of time, and after G, 80H, both these are not there today. Nitish is asking, sir, एक clarification का doubt है, यहाँ exclusive electrical word लिखा है, मतलब अगर एग्जाम में हाइब्रिड वर्ड यूज हुआ तो इग्नोर करेंगे तो सही रहेगा ना? Yes. See, now basically what they are promoting over here is electric. Now, they have not said that if it is a hybrid vehicle, we have a problem. See, basically hybrid vehicle is also majorly electric. Only as an additional power option, they are providing the other option of fuel. So that if by chance you are going on a long trip, or if somewhere the facility, because till now understand one thing, we are not having option of proper e-charging stations. Right now, also, if you see electrical vehicle, the charging is done at your home itself. You do not have charging stations except in few major cities. So that is why I believe that whenever they are giving hybrid, it is mainly e-vehicle only with the additional power backup so that you are not stuck up anywhere on the road. Now, G for God, and for God there is donation. The section simply says, if you are making donations, I will give you deduction. That's it. Now, till this or before G, all the sections that we studied were giving deductions to individuals and few were giving to individuals and HL, but nobody other than that. However, G for God and God is for all. So this section is the first section which gives deduction to all assessees. You may be individual, you may be company, you may be partnership firm, you may be HUF, anybody. So God is for all. So the deduction is also for all. Now, most interesting and important point over here is that the deduction is allowed if you are making donations, and they have classified the donation into 4 categories. Pay attention. The donations are classified into 4. 4 is then split into 2 and 2 is then split into 4. How? So first, donations are covered. What type of donations? 2 types. What are these 2 types? First 2 is donation to funds. The other 2 is donation to organizations. Like generally, we traditionally have been giving donation to not funds, but to organizations. Now you'll ask me, sir, what is fund? What is organization? Simple. Till now, where have you all been giving donations? You all have been giving donations to some religious place, or you all have been giving donations to some charitable organization, which falls in this, what? Some institution or organization. Only when the COVID came, we got to know about this, what is fund, because we all heard Prime Minister's Care Fund. So Prime Minister Care Fund is a fund where you are making payment to a bank account. It is not any organization or institution. It is a bank account opened for specific purposes. Like you have a fund for the benefit of army men children or the widows of army men, which if you see many times Akshay Kumar promotes a lot. Again, what it is a fund? Fund means it is a bank account where if you make the payment of donation, the donation would be utilized for one specific purpose only. Similarly, for cleaning our rivers, you have the Clean Ganga Fund. Then for developing a particular area or sector, you have a fund. So there are different types of purposes for which different bank accounts have been provided where anybody can make contribution. So that is what is the first category, which is funds. And the second category, which we traditionally know, that is what is institutions or organizations. Now understand, they are providing deduction in 4 parts, but firstly 4 is into 2 categories, funds and institutions. Now what is the difference between this? If you are making donation to funds, there is no limit. Whatever amount you are making payment, entire amount is eligible for deduction. So once you make payment to funds, whatever payment you are making, entire amount is eligible. There is no limit. However, if you are making payment to institutions, whatever payment you are making, that payment will be compared with a limit. Whichever is lower, only that amount is eligible for deduction. So funds, no limit. Institutions, limit. Correct? Now, within funds, the deduction may be 100%, that is whatever donation you have given, or the deduction may be 50%, that is half of the donation. Similarly, within institutions, deduction may be 100% or deduction may be 50%. So this is how you have four categories: funds, institutions, 100% deduction, 50% deduction, 100% deduction, 50% deduction. So this is how the deductions are given in four categories. Is this clear? Yes, everybody understood? Now see, this is the list of those four categories. Category 1, donation qualifying for 100% without any qualifying limit. So it is this. This is no limit and it is 100%. Category B will be no limit but 50%. So see, category B. Donations qualifying for 50% but without qualifying. So there is no limit, but the donor deduction is 50%. Then third is donations which are eligible for 100% but are subject to maximum limit. And fourth, donations which are eligible for 50% and are subject to limit. Now, these are the four categories. So what are the categories? No limit, 150. Limit, 150. Four categories. Now, in these four categories, what will fall? I have given you the logic, or I have given you the shortcut. All funds will fall in these two categories only. That is, the funds will never have a limit and institutions will fall here only. Now, yes, there are exceptions to this rule. Few institutions are falling in this category. Other than that, all institutions are falling in this category. The logic is funds no limit, institutions limit. Correct? How to remember 150? Simple. Where the fund is in the name of some person like Rajiv Gandhi, Jawaharlal Nehru, then it is 50%. But where the fund is not having any person's name, the name is generic like Central Fund, State Fund, Prime Minister Fund, Chief Minister Fund, some Ganga Clean Fund, no person's name is there, then it is 100%. So where no person's name is there in the fund, 100%. Where person's name is there in the fund, 50%. See, you can remember this whole list of around 40 plus names with this simple logic. What is the logic? When limits are applicable, in these two categories, you will find the names of institutions. And in these two categories, you will find the name of funds. Yes, there are few institutions included. I'll give you the logic for that also. Then within this, when 100 or 50, answer is simple. When there is a name of a person, it will be 50. Again, there is one exception. There is only one Prime Minister Fund, which is falling here, which is in 50. But other than that, all funds which are in some person's name are falling in 50. In 100, all funds which are not having any person's name, which are having generic names, are falling in this. So this is how you remember the rule for when funds are 100%, when funds are 50%. Similarly, rule for when 100 and when 50. So 100 is, see, now you are making payment to some institution. Who is this institution? Government. And why are you making payment? For promoting family planning, which is a national issue. Second, where you are making donation to institution, which is promoting sports. These are the only two institutions which are falling in 100%. All other institutions will fall in 50%. So as you can see here itself, in 100%, you have only two. One is government, which is doing what? Promoting family planning. So if you are making payment of donation to government, which is an institution, and for only one purpose, that is promoting family planning, it is 100%. Second, if you are making payment for sports development, like to Indian Olympic Association or other association or institutions established in India, and what is the purpose? The purpose is development of infrastructure for sports games. These two purposes where you are making donation to institutions. So this two categories institutions, in this 100% is only two. One is government for family planning. The other one is sports. Other than that, all other institutions. Now, what are the other institutions where we have been making donations traditionally, like charitable, like religious, like school colleges? All this will be 50%. So, four categories: no limit, limit. So, here, whatever donations you are making, since both these categories are coming in limit, you have to compare the donation amount with the limit amount, compare them, whichever is lower is your eligible amount, and then check the eligible amount is under which category. If it is under this category, take full deduction. If the eligible amount is under this category, take half. Here it is funds. In funds, the rule is if it is in the name of some person, you take half. The only exception over here is there is only one fund by the name Prime Minister Drought Relief Fund, which is in half. Other all Prime Minister, Chief Minister, central state funds are in full. Right? Now see this list. This is category first. What is the category? There is no qualifying limit. So there is no limit and the deduction is 100. You will find all names which are of funds and no person's name you will find. Because our rule is no limit is only for funds. But yes, in this list, as an exception, you will find names of few institutions. But that also you can remember because they are either for education or they are for medical or they are for communal harmony. Only these three institutions are covered. For promoting education, for promoting medical, and the third one is for maintaining communal harmony. I did not get your point, Bedananda. So see the names: National Defense Fund, Prime Minister's National Relief Fund, Prime Minister's Armenia Earthquake Relief Fund, Africa Public Contribution Fund, National Children Fund, National Foundation. Now see, this is an institution. It is not a fund. But why it is kept in this category? Because the purpose is very big, very important for our country, that is maintaining communal harmony. On and off, we see many communal disputes, riots, disturbing the peace, disturbing the smooth functioning of different parts of the country. So that is why this today is a very important requirement of the country. So that is why they have put it in 100% without limit, even though it is an institution. Similarly, next is for promoting education. Education is again the biggest requirement of a country. So approved university or education institutions which are of national eminence. So this is again institution, but since this is again of national importance, they have put it in the first list. Other than this, again, you will find one more, which is relating to medical. Other than this, all are funds, as you can see. And there is no name of any person. It is all central, national, prime minister, chief minister. No person's name is there. You will find the name of funds only. Again, you get an institution. Again, why? Because it is relating to education. Zilla Saksharta Samiti, which is for providing primary education in villages, towns. Then comes the Medical Association. What is that? National Blood Transfusion Council. See, to whatever extent our science may have progressed, till date, we have not yet been able to manufacture blood in a factory or in a laboratory. You still require some living person to donate blood. So still our science has to progress. Still many body organs, if needed, has to be transplanted from a living person or a person who has just passed away. Because again, till date, our science has not yet been able to manufacture organs, except now few things are coming up where artificial implants are done. Other than that, you require these organs from a person. So again, these bodies, even though they are institutions, not funds, but they are of national importance. Remaining, you will find all funds. So what is my rule? Remember my rule. Funds, no limit. So that is why first and second both are no limit, are for funds. Other two are institutions where you'll have a limit. Within this person's name, you'll have 50%. No person's name, you'll have 100%. So here you will find no person's name. It is all 100%. In 50%, now you have only one fund, which is Prime Minister's Drought Relief Fund, which is put in 50%. Then coming to 100%, and now you have a qualifying limit. So first is government, and it is for family planning, and the other is for sports development. Coming to the last category, where you have 50% deduction and also there is a limit. Here you will find all institutions, and these are the institutions where we have been donating. So institution or fund established in India for charitable purpose. Government local authority for any purpose other than family planning, because family planning is 100. Authority constituted in India by or under other law enacted for dealing with and satisfying the needs of housing accommodation. Any corporation established by central state government for promoting interests of members of minority. For renovation, repairs of notified temple, mosque, gurudwara, church, etc. or places of historical, archaeological or artistic importance. So as you can see, the list is divided into these four categories. Funds no limit, institutions limit. Within funds, all national, central, etc. funds are 100, and only today one fund is in 50%, that is Prime Minister's Drought Relief Fund. In institutions, only two institutions are 100, all other are 50. I hope you all have understood this, students. Anybody having any doubts or questions? Yes, no doubts, perfectly clear. Hardik, beta, see, in 36, the family planning deduction is allowed where the company is doing expense itself, where they are making payment to others who are doing family planning, the deduction cannot be allowed in 36. Then you have to come here and check whether that other person is government. And if it is government, then only deduction is allowed. Nanda Gopal, beta, I have already informed you that we will be taking practical sums. Beta, let me complete first sections. Because until unless I complete sections, we cannot do practical sums. You need to know the sections because every practical sum will have other section references also. So please be patient. We still have two more sessions on this. Is this clear to all? Great. So we stop over here. We continue our topic again in the next lecture. Kind request, please go through the entire module now, even the remaining sections. They are very straightforward, so that if majority of your sections are clear, then we can take a few sums which deals with how to do practically this particular chapter. Practically, it is very easy. The main challenge is remembering the conditions and the minute requirements put in different sections. Fine. So thank you very much for today. Let us conclude our topic here. This session we conclude here, and we meet next lecture to continue and complete this session. So thank you very much, everyone. Keep studying. Yes, beta. What is your doubt? Tell me, Nitish. Nitish. Nitish, beta, are you asking the doubt? Transfer of asset EWDV calculation may. Transfer of asset. ठीक है ना बेटा. So I think it makes no difference ना. You have just simply put it in the form of a formula. So if you are comfortable understanding it this way, you can use it this way also. Not a problem. चलेगा. Use कर सकते हैं. Only you have to remember the method is WDV. Fine. ट्रांसफर ऑफ लैपटॉप्स 50% WDV लगता है तो उसका पूछ रहा था. नो बेटा, देयर इज नो इफेक्ट ऑन मार्क्स. You can use these shortcut formula for doing that. Not a problem. But Wednesday, I have no idea. Anyways, मेरा क्लास तो नहीं रहता है ना Wednesday को. I don't know. I have to check the schedule. But I don't know whether 25th is off or it is on. I have no idea, beta. Maybe you'll be informed by tomorrow. Okay, perfect. So thank you all. Thank you very much. Take care and keep studying. Bye bye.